Nexford Capital presents itself as a simple, accessible investment platform promising daily profits. But a closer look at its structure, regulatory status, and official warning history raises serious concerns about its legitimacy and sustainability. When reviewing nexfordcapital.com for the first time, the operational model immediately stands out for its simplicity. Deposit funds, earn a fixed daily percentage, withdraw earnings, invite others and receive additional bonuses. There are no disclosed trading records, no audited financial statements, and no independently verified performance data. Instead, the platform advertises fixed daily returns ranging from 2% to 7%, depending on the selected plan. In real financial markets, consistent multi-percent daily returns without extreme volatility are statistically unsustainable. Markets fluctuate. Risk fluctuates. Even the most successful hedge funds do not generate predictable daily percentage gains without corresponding exposure and documented performance history. When such returns are presented as structured plans rather than speculative outcomes, the relevant question shifts from how profitable they appear to how long they can possibly continue. If a financial license exists, verification is straightforward. A legitimate platform can be located within seconds in an official supervisory register. In this case, regulatory verification leads in a different direction. The website does not disclose a verifiable license number, does not identify a registered legal entity tied to a regulator, and does not name a supervisory authority overseeing its operations. Independent checks were conducted across major public regulatory databases, including the Financial Conduct Authority, the Cyprus Securities and Exchange Commission, the Dubai Financial Services Authority, the Australian Securities and Investments Commission, as well as authorities in the United States, such as the Securities and Exchange Commission and the Commodity Futures Trading Commission. At the time of review, no confirmed authorization corresponding to nexfordcapital.com was identified. Operating without verifiable authorization means there are no enforceable capital adequacy standards, no mandatory segregation of client funds, no regulatory supervision of operational conduct, and no formal complaint escalation mechanism. Regulation is not decorative, it is enforceable oversight. When it is absent, structural risk increases significantly. The risk profile becomes even more serious when considering official warning status. Nexfordcapital.com appears on the warning list of the Central Bank of Russia under the classification Signs of a Financial Pyramid. Regulatory classifications of this nature are issued following supervisory review and internal assessment. They are not based on online speculation or anonymous forum commentary. When a national financial authority publicly identifies pyramid characteristics, this designation materially changes the risk evaluation. The absence of parallel warnings in other jurisdictions does not neutralize an existing official classification. A single regulator's formal warning is sufficient to warrant heightened caution. The business model itself reinforces these concerns. The platform promotes fixed daily returns of 2%, 3%, 5%, and up to 7%, combined with a 10% referral commission for recruiting additional participants. Fixed high daily returns combined with recruitment incentives form a structural pattern commonly associated with capital inflow-dependent schemes. In regulated investment environments, guaranteed daily yields at these levels would trigger immediate compliance scrutiny and require detailed disclosure of underlying asset performance, liquidity management, and risk exposure. Financial markets do not produce uniform daily percentages. When payouts depend primarily on continuous new deposits rather than audited asset growth, sustainability becomes mathematically fragile. This is not a matter of opinion. It is a matter of structural arithmetic. Domain registration data provides further context. The domain was registered in mid-December of the year 2025 with a one-year registration cycle. A new domain is not illegal by itself. However, when a recently registered domain is combined with the absence of disclosed regulation and the presence of an official warning citing pyramid characteristics, the operational maturity appears limited. In finance, trust compounds over time through transparent reporting, regulatory compliance, and consistent oversight. A short operational timeline combined with high fixed return promises increases uncertainty rather than reducing it. Another factor worth clarifying is potential brand confusion. The name Nexford is associated with Nexford University, an accredited online educational institution. Nexford University has no connection to nexfordcapital.com. Brand similarity does not confer regulatory legitimacy. In financial services, legitimacy is verified through licensing records and supervisory oversight, not through familiar wording. When evaluating overall exposure, several structural indicators converge. The platform promises fixed multi-percent daily returns, lacks verifiable regulatory authorization, offers referral incentives, operates on a recently registered domain, and appears on a national regulator's warning list, citing signs of a financial pyramid. Individually, some elements might not appear decisive. Referral programs exist in legitimate industries. New websites are launched every day. High returns can be marketed attractively. Taken together, however, these factors form a consistent high-risk pattern. Investors interacting with such a structure may face the absence of compensation scheme protection, no enforceable regulatory recourse, limited recovery mechanisms, and an elevated probability of capital loss. This is not a question of marketing style or website aesthetics. It is a question of structural exposure to unregulated financial activity. When I first observed the return structure promoted by Nexford Capital, the simplicity seemed designed to reassure. After reviewing the regulatory record and official warning classification, that same simplicity became the central red flag. Sustainable financial operations require transparency, audited performance, and oversight. When oversight is absent and daily profits are presented as fixed and predictable, caution is not optional. It becomes necessary. If you have already interacted with nexfordcapital.com, it is important to document communications, preserve transaction records, and retain verifiable evidence. Objective documentation helps reduce further exposure and assists others in assessing risk accurately. Financial decisions should always begin with regulatory verification through official public registers rather than relying on return percentages or promotional language.